Hi guys, this is my trading journal for Friday the 23rd of April. So yesterday, Thursday, the markets were spooked. They were spooked by talks from the administration about an increase in corporate tax and an increase in capital gains tax. And that kind of took center stage yesterday and it sent all the equity prices lower. Come Friday, and it's as if those talks never took place or they've been deleted from history. And the markets have shrugged it off and ended the week on a massive rally. All the major indices closed in the green today, and as you can see from the heat map, it's a lovely flower bed of green shoots. Company earnings have also lifted the market, with many companies like IBM and Goldman Sachs smashing their earnings forecasts, and that helped push the markets higher. But there were also some other companies that fell short and missed their numbers. American Express and Netflix stand out. Both of those were punished hard for missing their numbers, but the impact of the misses on the overall market is not as significant as the impact of those that met their earnings forecasts. In terms of volatility, the volatility index has now returned home and it has settled down below 20, where it usually spends most of its time. Historically, the VIX usually resides below 20 and just spikes above it and then goes back down. It was down about 9% today to close at 1733. So the markets are not expecting that much volatility. That can change in a second, but for the time being, VIX is below 20. There are now 28 days for the regular May contract to expire. But I have no open credit spread for the May expiry, so the days to expiry is of a lesser concern this month than it usually is. In terms of trade ideas, I had no new trade ideas today, and I shall be moving on to my open positions. I have 4 open positions and 1 synthetic position. All the positions are debits, and the review of the P&L is going to be slightly different to a credit spread. So these debits are directional plays, and the stock needs to move in my direction in order for the position to make money. If it stays put, theta decay will work against me and erode my premium. So I'm going to analyze the positions bearing that in mind. The synthetic position is a Gnog one. I never got filled on this. It was buying the 20 call, the May 20 call, for a debit of 37 cents. I never got filled, but I know a number of people got filled, so I'm going to cover it. So Gnog is the first position I'm going to cover. So Gnog closed at $14.51, up about 37 cents on the day. Gnog, unlike the overall market, is trading near the bottom of its 2-year range, while the overall market is trading near the top of its 2-year range. So this, I'll call this around the bottom of the range, and around here would be the top. So the overall market is trading near the top, Gnog is trading around the bottom. There has been and continues to be a stream of good economic data and positive news about Gnog. And now all that is required is a catalyst to move it up. That could come as a rotation from some of the other fully valued stocks that are currently sitting around the 52-week high, or it could be something else that will act as a catalyst to move it higher. But looking at the chart, it has bottomed. It bottomed around here in the current cycle, bottomed here. The sellers have tried 3 times to take it lower, and it's now making its way back up. The target for this remains around 17, so it's around here. And the bigger target would be around here. And the reason I'm unable to set a target price for the call is because I have no idea how much the 20 call will be worth if and when it gets to around that level. When it hits 17, it could be 60 cents, it could be $1, it could be $1.50. Option prices are non-linear, as the jargon goes. The price of the call will be influenced, amongst other things, by delta, gamma, and vega. That said, if you want to set a target of, say, 74 cents, I mean, it was bought at 37, you can create a GTC order to sell it at 74 cents, and you can take half the position off when it trades at 74, or you could take the entire position off at 74, or you could wait for the stock to hit 17, around there, and see what the 20 call is worth when it hits 17, and then make a decision as to what price you want to sell it at. I'm keeping an eye on this position, and when it hits 17, I'll post an alert, and then you can decide on what to do. We can decide on what to do, whether to take profits or whether to take the whole thing off or take half of it off. And as for the downside on these either straight calls or debit spreads, as I mentioned previously, I have no stop loss on my straight calls or on my debit spreads. There is an implicit stop built into the trade, and the most that can be lost on this trade is 37 cents or $37 per contract. I'm willing to risk it all on the trade, and I position size accordingly to reflect an amount I am comfortable losing. So I don't have any stops or downside protections on this. The protection is built into it already. All I can lose is how much I paid to get into the trade. So that's this one. Moving on to the second position. The second position is in BLUE. On this one, I bought a 45 call, long 45 call at 40 cents. So BLUE closed at $28.65, down about 13 cents on the day. BLUE is also similar to GNOG in the sense that it is at the bottom end of its 2-year range. This is bang at the bottom end of its 2-year range, around there. It is bottomed, and it now appears to be consolidating, and the stock is being accumulated passively. You can see these green candles here, all this, let me just zoom into it, without a spike in volume. So it's just been accumulated passively without pushing the price up too much. There is a massive gap to the 44 level around here that needs to be filled at some time, and the catalyst for the move to the upside may well be earnings. So BLUE earnings are due on the 10th of May, and that is what I'm waiting for, to see if it will catapult the stock higher and move it towards filling the gap. $44 is indeed a long way from where we are, but if I've learned anything in the market, it's never to say never in the markets, and I've seen wider gaps filled on earnings announcements. It could easily gap up and open around here, which will make it easier to fill. Again, this is, of my open positions, I think this is the most ambitious in terms of the targets. The other ones have an easier target to fill, but with earnings and with this thing having been smacked down so much, all they need to do could be just to meet expectations. They don't even need to beat it, and it would go up. And that's why I cannot set a target for this long call, because if it gaps up to 38, the call could be worth $3. It could be worth $2. I have no clue what the $45 call would be worth at $38 or $40 on the stock. So I initially set a target of 80 cents on half of my position on this one. I'm going to cancel that GTC order and play wait and see. I'd like to, if it does move in my direction, I'd like to capitalize on it. Just doubling my money on it wouldn't be good enough. If this thing jumps from here, if it jumps from here to around here, I don't just want to double my money, I want to make about 4 or 5 times on it. So I've cancelled my GTC order for 80 cents. You can leave yours if you want to take half your position off at 80, or you could take everything off at 80. It's your discretion, you know, it's your prerogative what you want to do, but that is what I'm doing. I've cancelled my GTC order. I'm going to play wait and see what happens. For instance, if it gets to 40, how much the 40 call or how much the 45 call is worth. So that's the second position. The next position is in IQ, and on IQ I bought the 17.5 22.5 call spread for a debit of 46 cents. So IQ closed at $15.60. It was up 17 cents on the day. And again, IQ is in the same camp as the previous 2 positions. It is at the rock bottom end of the 2-year range. That's the bottom. You can call this the mid, and this would be the top end of the range. On this one, the buyers are beginning to come in, and they appear to be buying aggressively. They're not even passively buying it. So you can see this massive green candle here, and the volume spiked as well. And then you have these 2 dojis, but the volume, there's massive volume on that candle. It's not just these tiny candles around these, not just these tiny volume bars around here. That was significant buying lift off from on this one here. IQ also has earnings coming up, and that could well be the catalyst to move it up. Earnings on this one are coming out on the 18th of May, which is only 3 days until the May contract expires. However, my target on this one is easily achievable, and should it hit after earnings, my long 17.5 call should easily be in the money. My target on this one is here. That's my target. So when earnings come out, even with 3 days to go, if this thing keeps on rising and with earnings it just meets there, I mean, there's not much room to the downside on this thing anyway. So the path of least resistance in terms of post earnings announcements would be to the upside, and we've already seen some lovely volume coming in to buy it. Again, this is why I'm not able to set a target for this spread. I do not know what the 17.5 call will be worth if the stock gets here or if it gets here. But feel free to go ahead and set a target of double the premium, which would be 92 cents. I am simply going to wait and see what the price of the spread is when the stock gets to either 16 or 17, and maybe it can even go higher. So I'm not setting a target on this one as well. I'm just going to play wait and see. And the final position is in, oh, it's not the final position. The next position is in MXIM. On this one, I bought the 85.80 put spread for a debit of 63 cents. So MXIM closed at $96.19. It was up about $3 on the day. Now MXIM is the complete opposite to the previous three positions. In this case, MXIM is at the top end of the 2-year range. And this is the fourth attempt to break through resistance at 98. So resistance, if we call this, resistance around here, that's around the 98 level. It tried here, came back down, tried here, came back down, tried here, came back down a bit, and now it's trying again. So this would be the fourth attempt. It has earnings coming out next week, Tuesday, the 27th of April, and the numbers have got to be stellar in order for this upward momentum to be maintained. MXIM will not only have to meet the street expectations, they will have to blow past it, and they'll also have to guide higher for Q2 and for the rest of the year. With its current share price of $96.19, it works out a PE ratio, price earnings ratio, of about 32 times forward earnings, and it's not particularly high when compared to its peers in the same sector. PE of other companies in the sector range from 17 times earnings to about 48 times earnings. However, the top 5 companies in the sector all have a buy rating by the analysts. MXIM has a hold rating, while the others have a buy. Now, MXIM could come out with some fantastic numbers and blow the lid off the stock, and it could take out this level and gap up and come around here. That could easily happen. But with this position, I am betting that all will not be perfect, and the path of the least resistance is to the downside. They've tried a few times, and my target of 85, which is around here, is easily achievable. If the numbers are bad, it'll first take out that, and then the next target would be around here. And with earnings coming out on Tuesday, there is ample time before this contract expires, before the May contract expires, for the stock to hit my target. So that's my reasoning behind this one. Should the market not like the earnings number and decide to take it down, I would be looking to at least take half my position off here. It just depends on how the market reacts. If they smash it down with some massive volume, then I could sell half here and then wait to maybe see if it comes down to this level. It just depends on what the numbers are. So again, that's why I'm unable to set a target on this. I have no idea what the spread will be worth if the stock comes down to around this level. And now the final position is in TAN. TAN, I bought the 9500 call spread for a debit of 46 cents. And there's a note here, I sold 4 contracts at $1 during the week. So final position, TAN. TAN closed at $90.94. It was up about $2.84. Now, the TAN position is totally different from all the other positions. Different in the sense that it's neither near the top of the range nor is it near the bottom of the range. It's somewhere around, should we say, middle or top third. It hit the top, so get rid of this. Hand came, oh sorry, hit the top. Buyers tried once, they tried twice, they tried 3 times, and then this thing goes smashed down. Now the sellers tried to take it, so this 80 level has been support. Sellers tried once, they tried twice, they tried the 3rd time, and look at this volume here. So massive volume came in to turbocharge this thing up, lift off from 80, a tiny gap around here which needs to be filled, and then it's been going up. And like the other positions, I didn't set an initial target for my spread, but yesterday with this lift off, the price of the spread was more than doubled what I paid for it. So I paid 46 cents to get into the spread, and yesterday it was trading for above $1. So I decided to take half of my position off, and now I have 4 contracts left, and technically that means I have no risk at all in this trade. I've taken all my risk off. My initial cash outlay of the debit has been taken off, and what I intend to do with this one is to take another 2 contracts off, maybe around here. If it gets to around 94, and I'll be willing to leave the other 2 contracts to see how far they can run. This is the house's money I'm playing with now, so I can no longer lose on this particular position. Could it come back to test this level? It very well could. TAN is a solar ETF, and I saw a note somewhere about the ETFs, that so the solar stocks being on fire because of Biden's stance on global warming and his plan for in terms of global warming. So I think that's what's lifted up these solar stocks. Massive volume there. This could be this could be where I'll sell to, or if it depends on how it reacts when it gets there. If it just blows past it, I could wait to get here, 100, sell 2, and then leave the remaining 2 to see how far I can go. But bearing in mind expiry as well, I haven't got that much time. I've got time, but I haven't got all the time in the world to wait for it to go up. But that's my thinking on this one, and that's why I couldn't set an initial target, but I took half the position off when the spread got to $1, and that was nowhere near my 95 call that I sold. So I sold the 95 call. Stock got to, I'm not sure if it hit 90, it was about 89 when the spread doubled. So I'll be holding on to the remaining 4 and react when the market gets to these levels. And that brings me to the end of my journal for today. Here's a quick summary of the takeaways from today's journal. I explained the rationale for putting on the positions I currently have and what my objectives and targets are as far as the underliers are concerned. I also explained why I'm not setting target prices for my spread positions. Be on the lookout for update alerts on the open positions regarding targets, or taking some profits or taking all profits. And I may also find some more earnings play trades for the May expiry. And if I do, I'll send out an alert, and then you can decide whether or not you want to put them on. So have a great weekend, everyone. Speak to you next week. Thank you.